Well, so far today, we're holding the gains. I'll say the gains in the bond market, which is the reduction in rates over there on the 30-year fixed. You're seeing those down just a little bit. Will that continue? Well, it's based on a lot of the data that we're getting in. There's a great little post here from CNBC. Diane Olick, she's the real estate contributor there, and she had some take on what some numbers came in today. The sales numbers are dismal, but you still have home prices going up. So there's a dynamic here that just doesn't make any sense. So let Diane Olick explain it to you guys, and then I'll come in after the video and kind of put a lot of this into context for you. So without further ado, take it away, Diane.
Busy morning in data between claims and GDP and now pending homes. Let's get to Diana Olick. Morning, Diana.
Good morning, Carl. Pending home sales dropped 7.7% in April compared with March. The street was looking for basically flat. Sales down 7.4% year over year. Now, this count is based on contracts signed during the month, so at that month's mortgage rates. And that's your culprit. The average rate on the 30-year fixed ended March at around 6.9% and then just took off, hitting 7.5% by the end of April. With prices still climbing and supply very low, leading to increased competition, that jump in rates was a huge factor. Sales were down in every region of the country, but they fell the hardest in the Midwest and West, which is interesting because the Midwest has some of the most affordable markets and the West the most expensive. So you do the math. Anyway, mortgage rates eased up a little bit in May, but are rising again now. Another report out from Redfin this morning said the share of sellers doing price cuts hit 6.4%. That's the highest level since 2022. The median asking price also dropped for the first time in 6 months. So, guys, interesting dynamics going on with rates.
Yeah, I mean, are the lack of activity.
So hold on for 1 second. So what she's going to do now is she's going to compare, because I keep saying, guys, if you have a house under 300 grand or 300,000 or less, it's selling like hotcakes. But the higher end homes are sitting on the market. So they address this right here. So this is pretty cool.
Activity, the negative sales that we're seeing, Diana, is it going to have an impact on prices, or this inventory issue is still forcing prices higher?
You know, you would think so. That's how it usually works, right, historically, but it hasn't been in the last year. And that, again, as you said, is because of the supply issue. Supply is leanest on the lower end of the market where demand is strongest. We are seeing a lot more supply on the high end of the market and more activity on the high end of the market. So you might see prices easing up there just because sellers don't have quite as much activity as on the lower end. But again, if you still have this lack of supply and lots of demand, it's going to keep a floor under prices.
I can validate what she's saying. The last 3 months, we've had record months, and our average loan is about $300,000. So you can see when you go to the higher end homes, they're stacking up, they're having price cuts and so forth. So that's the one piece of the data we have so far today from Diane Olick. Then you go through here. Here's what I announced this morning. We had the jobs market starting to crack. This is how many jobs were open. U.S. job openings. Previous reading was 8.4, revised to 8.3 million. Now there's 8 million. Okay, but here's the shocking part. How many people basically quit their job? 3.5 million. Last reading was 3.3. It went up to 3.4. So will this go up? So there are a lot of people, quitting their jobs, I guess I'll say, but the job openings are starting to dwindle a little bit. And then we had a 42-day auction that came in kind of okay. Other than that, everything's okay there. Let's go over to the last piece of the puzzle here. CoreLogic, US home prices keep going up, and they're up 5.3% again. And guys, I don't keep coming up with this. This was posted just now. Okay, so I'm just keeping you up to date on the information coming around. Now, one piece of the puzzle I want to explain to you guys. How do you compare mortgage products? This is what we do behind the scenes. This is one of those things, and we actually made it available for you guys down below. So down the description, you can actually purchase this. It's really cheap, and you can do this. Here's kind of cool, and we do this behind the scenes for you guys. So let me go through this with you real fast so you can understand what it is, and if you want to get this, check out the description down below. So if you want to compare different mortgage options, just go to here. Put in the scenario where you live and so forth, and then scroll down. Like in this case, I put 3 different options in here: conventional, FHA, and VA. I took the rates right off of what they were in MBS Mortgage News Daily, so it's right through there, and then how much the minimum down payment is. So here's the information. So this person, it's the same person, same credit score, same everything else. Here's what it looks like. So if you're a veteran, I always suggest please go with your VA loan, unless you've used it multiple times and it's getting really expensive. But most of the time, this is the product to go with. And then from there, you can kind of, go betwixt and between FHA and conventional. But in this scenario, I went through and I put in, here's the rates, the down payment and everything else. You go down through here. It does factor in what the costs would be. So for example, if you had a cost for an FHA loan and so forth, then you go down through here, you can figure in, if I make some extra payments, which one would be better for me? But then it comes down to here and it's, what's the best loan for this scenario, for this person? Well, it says VA and it tells you it's better. Why? It's going to save you 11 grand over the next 10 years. And you can scroll this out further and further and the data might change. Okay, but let's say, for example, you're not a veteran. Okay, so you go up here and let's just get rid of the VA loan. All right, so we're going to get rid of that, scrap it. Now let's see which loan is best for you. So you scroll down through here, and this one's saying FHA. Let's go to longer run. Is it continue to go through? Yep, FHA looks like it's the best product for you if you're in your house for longer than 3 to 4 years. So that gives you that information there. And then you can go down through here and compare a whole bunch of different items here. Finance amount, the insurance that you had to get for monthly mortgage insurance, interest rate, the lender's fees, everything else, with your monthly payment broken down. Sell by sell by sell. Okay, you have it right there. And then with the differences in equity, how much your equity would build over time. And the list goes on. There's a plethora. I just learned that at church this weekend. There's a plethora of data down here to help you guys make that final decision on which loan product you should choose. So that's that piece of the puzzle right there. If you actually go down to the description below, you can actually get this calculator. It's right here. It explains it to you if you want to check that out. But that is my report for today. So if you're out there and you're like, Dan, I need some help. So I'm a mortgage loan officer. I'm licensed in every state in the country as well as Puerto Rico. So if you're out there and you need help, reach me because I can help you no matter what state that you're in. You go to therateupdate.com. Here's our information. You can go up through here, check and see if there's any grant programs available for you. You can even apply online, but if you'd rather call us, call in, talk with me or one of my loan advisors, you can scroll down right through here. Here's the phone number, 844-775-5626, or you can email me directly. And yes, it's me at dan@therateupdate.com. Thanks for watching. That's my last report for today. And if you find value in this and you haven't yet, please subscribe right down over there and be a member of my team. Thanks so much. See you tomorrow, folks.